Hey guys, Don Durrett, Gold Stock Data. I should be analyzing stocks, but I feel like this is important. This is more important. I I've been saying that we're waiting for a fear trade before silver breaks out or before the Hui breaks out, and I mean that's looks like that's how it looks like how it's playing out, right? The Hui never broke out above 350, which is I think the breakout level. I think we got to 365, I think, but now we're back at 325. So we're back in the channel. So we've been in this channel, the Hui channel, for 10 plus years. And I've said, I don't expect to break out of that channel until the fear trade arrives. And the fear trade we're experiencing right now, it's starting to ignite, right? The fear trade is when uncertainty reaches a certain level and people are no longer comfortable holding the S&P 500, for instance, and they're like out of the market. And at that point, you go into a risk off mode. So the Mag 7 will be considered a risk on owning stocks, uncertainty. Risk off is where you hold bonds, more bonds than stocks. And so that's kind of a fear trade when, the more nervous investors get, the more they go for these risk off stocks. That the irony is that gold is a risk off asset. It's the ultimate risk off asset. So ironically, gold and stocks, gold mining stocks and silver mining stocks become a risk off investment. It happened in the 1930s. The stock market was in the toilet, and you got homestake mining ripping higher because gold was kind of a risk off asset. Same thing happened in the 70s. Same thing happened in the 2000s. Gold becomes a risk off asset. It's like, where do you go? Where do you hide? People hide in gold, right? So my point is that the risk off trade seems to be beginning, seems to be starting. And so that's the reason for this post. So I made this tweet today, and I said gold is at 29.80, silver is at 29.80. So we have a 100 GSR, and the Hui's at 324. And I expect one more leg down in April, but there could be two or three. So we have these dead cat bounces. Those legs will correlate with the S&P selling, which is kind of what we're seeing, right? The S&P has been selling off. Once you went below that 5,500 level, then that's what I said. That's kind of the line in the sand. You're above 5,500, everybody's happy, everything's fine. You go below 5,500 and you enter a correction phase. Once you're in a correction phase, that's when you start getting nervous, right? And then I said 5,200, 5,300 is when the risk level really starts to ratchet up. And that's exactly what's happened. We got below 5,300 and there's the risk level really ratcheted up, right? So I see now, I think we're in a downtrend. I don't think we're going to, we're off to basically this selling is going to go away. I don't think Trump's going to, drop the tariffs and everything's going to get fine. We're just going to start ripping higher, right? So I think we're headed to 4,500. I mean, if you look at the chart, I think 4,500 will hold for April. But I think we're going somewhere between 4,800 and 4,500 this month. And also think that gold has its fundamentals are improving. They're not getting worse. So if that's the case, if gold is actually getting better because of the fear trade, right? Gold's a risk off asset. So gold's fundamentals are improving while the stock market's getting worse because the economy is going into a recession. So if that's the case, I think 2,800 will hold on gold plus or minus $100. So basically 27 or 29. So if that's the case, that means that gold's getting ready to bottom, but the S&P is not. And so this creates an opportunity for us for investing in miners. So if gold's close to finding a bottom and the S&P is not, we can begin buying gold and silver miners. So the question is, when do we start buying? And so instead of using gold silver prices or the Hui as our buy signals, we can use the S&P as our buy signal. So I think once the S&P gets below 4,800, I think that's when we start to buy miners. And I haven't bought any miners this month. So I'm ready. I'm chomping at the bit to jump in. And so once we can start buying below 48 and then below 47, I think that's when you start getting aggressive. You start looking for anything you can get your hands on. And then below 4,600, I think that's kind of when you start loading the boat. It's like that's when you're aggressive times two. And then if you still got powder below 4,500, that's kind of your last chance because somewhere around 4,500, gold's going to bounce. And when gold bounces, once gold bounces above 3,000, you could see it ripping to 3,100. Once gold rips to 3,100, the miners are going to go with it. That's when you get that decoupling event and you lost your opportunity to buy. And then boom, you're above, the Hui is suddenly above 350. And so this is kind of your buy area, and it's an unusual situation because normally you don't see a setup like this. It's pretty rare, right? Because recessions are rare. But it definitely looks, I mean, we're always guessing. All analysts are guessing. I'm guessing. But this setup looks, if we are heading into recession, the key here, of course, is always about recession because gold is the antithesis of the economy. The economy is strong, nobody cares about gold. It's when the economy is weak that people want gold. The economy is weak, you're in a recession, gold is the ultimate risk-off asset, right? So if we are heading into a recession and the S&P is heading sub 4,500, then that's the perfect storm for gold. So I wanted to show you this post, and then I wanted to show you this article that I wrote called My Current Buy to the Bottom List. It's only on my Seeking Alpha group and on the forum. This PDF is posted on the GSD forum. Um, so I wanted to go over it. So after years of investing, I found this strategy called buy to the bottom, and it's probably my favorite way to invest in miners. But it only works when you can identify a stock that it's bouncing on a bottom. So that doesn't happen all the time, but there's two periods when it happens. One of those periods is when you have a massive sell-off. So, for instance, back in February, 12 months ago, more than 12 months ago, back in February, you had the HUI at 200. We had a lot of stocks that at that time were pretty much bouncing on their bottoms. And that was an opportunity. You could spot them. We had Avino at 40 cents. We had Endeavor, I think, at $1.70. We had Hecla under $4. So we had these stocks where you could identify bottoms and buy them to bottoms. So you get a massive sell-off, that's one. The other one is what we have today, and that's when you are approaching a breakout. So when you're approaching a breakout, you can identify a bottom, and I think that's what we're having today. So my point is, I think, and again, I'm guessing, I think that a lot of these stocks are going to they're already at bottoms, but the cycle low, which could last for quite a while, could happen here this month. And that's kind of what this is. So you've identified the bottom. Um, yeah, so I think that these miners only have about another 10% drop. That's about it. And so if I'm right, then you kind of want to catch that final 10% to 20% drop. So here's the HUI. And I mentioned this 10-year plus channel, and we were up here. We touched 350. I think this was 364, and then we touched. We touched it here. So we came into the channel in 2013, and we went all the way down about 200, and so 200 has kind of been the floor, and then 350 is the top, and these are kind of overshoots. And I think once we break out of this channel, I think we're going to 1,200 to 1,500. And I wouldn't be surprised if we go all the way to $4,500 gold. I think we get to maybe 1,600. So we have this big, massive move coming, which should last about 2 to 3 years. So if that's the case, once we break out of this channel, then all these miners are basically they're bottoming right here. They're bottoming right here, and then boom, they're off. You're not going to see their bottoms anymore. So here's the general rules of this strategy. You only want to do it when you have strong conviction that you're near a bottom. Um, so if you have that strong conviction, and then you don't want to buy a stock just because it's cheap. You say, oh, this stock's bouncing on the bottom. That's not a good enough reason. You only want to do this with stocks that you like a lot and they have a strong risk reward. So you just don't do this with any stock. You kind of want to have a high conviction that it has a good risk reward. It's near a bottom, has a good risk reward, has a good upside. And so you want to be selective, is my point, on which stocks you do this with. Because you need that high conviction because you're buying it to the bottom. You're basically saying, okay, I'm going to buy it here, I'm going to buy it lower, I'm going to buy it lower. So once you have that strong conviction, and then you don't want to over allocate. So just because you like it, it's near a bottom, oh, I'm going to throw 10% at it. That's not what this is. This is you don't want to over allocate. You want to be disciplined. What is your high allocation? And once you hit it, you're done. So you don't want to, basically, as long as it's under allocated, you can keep padding it and kind of buy it to the bottom. I like to do small buys. Not just, keep adding like 3% to it. You're not adding a lot, but you're kind of you're waiting. The other thing is you don't want to wait for the bottom. You want to buy it to the bottom. So this means that once you see that it's close to the bottom, then you take a position or you add to your position. Then when it falls another 10% or so and it's still under allocated, then you add some more. And if you get lucky, you'll get to do that 2 or 3 times. I remember I did buy to the bottom with a crypto, Solana, and I got to buy at least 3 times, maybe 4 times. I started buying it about 45 cents, I think, and I bought it all the way down to my last buy was at $9. It went, yeah, $9, and it went all the way to 250, and now it's down to 100. So maybe I should have taken profits at 250, but I just I was going to buy it all the way, and it got to 9. If it would have went to 1, I would have just kept buying. So as long as you have high conviction, you just keep buying it to the bottom. Um, I mentioned here about allocating risk levels. You need to know what your thresholds are. What is your allocation? Each stock's going to be a little different. So you need to know what is the high allocation for that individual stock. I know because I've been doing this for a long time, but that's something you need to learn. If it's an explorer or a developer or a producer or an optionality explorer, what's your maximum threshold for allocating? You should know that before you buy these stocks, not after, not during, but before. Like Avino, I bought that one to the bottom. It got to 40 cents and I made a purchase and I was hoping it would get to 35 or 30, but it never did. It pretty much bottomed at 40. So when you do this buy to the bottom strategy, you literally will get a buy the bottom. It would be a rare situation. If it's a high quality stock, the odds are it's not going to zero. So you generally are going to you will get that opportunity to buy the bottom. Um, okay, so I'm going to give you a list of stocks, and I mentioned a few that aren't on the list. So Pan American's not on there, but it probably could be. But it's trading at $22. If it was trading at sub 20, I would have put it on there for sure. And then Fortuna, um, I I just that one a lot of people like that could be one. I think it was down today. Fortuna could be one that you could consider on that could make it. Santa Cruz Silver, it's sold off quite a bit, 25%. And then there's a few more. Equinox Gold, if they can acquire Colibri, then that's going to be one. But that deals is should they're going to vote this month. So by the end of this month, we'll know if that closes. Serato, once they acquire Ascendant, and then Maritime once they finance their capex. So these are just some additional names that are close, and you probably have your own names. But then I have my conviction. Nine is the highest conviction, down to I think five. 9 to 5 is kind of where I'm at. See what I have here. Yeah, so I have a buy to the bottom target. And then I mentioned here, these are always speculation bets. These are gold and silver mining stocks, which are always speculation bets. These are never sure things. If you hold or are buying gold, silver mining stocks, know that you are a speculator going after baggers. You don't get baggers without taking high risk. These are not guarantees. Mining stocks are not slam dunks. We are speculators, people. You could buy one of these stocks and be down 25% in a week. That's how volatile these things are. You could buy Adriatic here at 245. They could do a news release saying that they missed, they have one problem at their mind, and this stock could be $1.50 tomorrow. That gives you that's how these stocks work. They're highly volatile. They hit you from left field. You never know what's going to happen. So don't I see people that'll put 10, 20, 30% in a single stock. You shouldn't ever do that because you can't know. You're just rolling the dice. I like to take the emotion out of it. If you're putting 5% in a single stock, you're literally gambling that that stock doesn't have a problem. And with gold and silver mining stocks, you never know which company is going to have a problem. They happen out of left field. Like Jaguar Mining, I thought they were very safe bet down in Brazil, and then they had a tailings pile. It wasn't even a heap leach pad; it was a tailings pile. It shifted, and it cost them 50, $75 million. We don't know how much it's going to cost them. I'm guessing about 75. Um, and the mine's down, and the stock went in the dumper. Uh, but who would have expected it? That's just a couple examples. Okay, so this is my list. Adriatic. So Adriatic, I don't know where it's at, around 245, somewhere around here. I only have it a 6 because they're ramping up production right now. So we don't know how they are. But if they hit their numbers, if they hit their production targets, then I think this is a 10 bagger. And so I don't think it's going to go much below 225. So you buy here, it hits 225, you add again. And then if it hits $2, you add again. And you're hoping, you get some at $2 or 190. That's kind of you're hoping it gets cheaper. Aftermath, big sell-off, trading at 30 cents. The last time I looked, this is a little bit old. Um, these numbers might not be exact, but I have it as sevens because, it's going to take them some time. This is a development project. Development projects tend to break your heart. America's Gold and Silver. I think this one is way under the radar. Yeah, after with the Barangay project, it's kind of a manganese project with, I want them to focus more on silver, but right now they're focusing on the manganese. But Barangay has 130, 100, 135 million ounces of silver. That could be 5 million ounces of silver a year at very low cost if they use the manganese to offset it. But I don't think they're going to do that. But if silver rips to $50, maybe they'll change their tune. But I like it. America's Gold and Silver. I like the Galena mine. I think the Galena mine is really good. I think that Galena mine is going to be doubling, tripling production at a good cost. And you get the Relief Canyon mine basically for free in Nevada. I think that mine's going to come back online. And then they have the Casala mine down in Mexico. So I like that one a lot. I mean, if you can, get it here at 40 cents or so, and then maybe you get it at 38, 36, which is the bottom. Eris, I think this stock is totally mispriced at 442. You can get it anywhere around $4. I mean, they're expanding production at Segovia this year. They're expanding Segovia. I think second quarter this year, they're adding 50% at Segovia. And then they start doing work on Marmato, and Marmato comes online next year. By the time they get Marmato on, I mean, they're going to jump production from 300,000 this year to 400,000 next year, 450 next year, and it's not priced in. This is one of the most mispriced stocks out there, I think. I mean, trading, I mean, if you look at their free cash flow next year, if gold prices are at 3,000, it's trading at a one multiple, which is insane. And they haven't had any problems down there in Colombia. Aris has been a kind of a solid producer. It's mind-boggling to me that people hate Aris. I'm going, why do you hate Aris? What have they done wrong? Ascot, this is going to only have a five. This is the lowest conviction. This one is high risk, but man, it's super cheap. I don't think it'll get more than 6 cents. You'd be lucky if you can get this thing for 6 or 5 cents. I just think that's a good risk reward, and it might fail. I mean, that's why it's a five. But if they get it working, I mean, this thing could easily be a 10 bagger, and I want to own mines in Canada. So yeah, I think I think I like it here at this valuation. Avino down to 146. It was almost at $2. And I mean, if you can get Avino down at a 120 area, um, I think that's it. If you don't own Avino, I think $1.50 still makes a lot of sense, and then buy it to the bottom so you get your opportunity here. Anything 120 or less, I think is a total steal. I uh, I think it bounced 623. It was at 623, which is kind of crazy. I didn't even think it would get much below $6. But if you can get Aya anywhere around $6, I mean that's just silly cheap. I have it at nine, so I have these at nine. This is my highest conviction. But Boumadine is just a thing of beauty, and Zagounder is getting larger. I mean, I think I is easily a 15 to 18 million ounce. It's going to be a 15 to 18 million ounce producer. They're going to be, and they haven't even started, thinking about acquisitions. They've been focusing on Zagounder and Boumadine. But I wouldn't be surprised, this is going to be a growing company. That they're not done yet. They have a good, strong management team. So yeah, I mean, if you can get I at a $6, that's just silly cheap. B2, I have a nine on it as well. 264, anything 250 or below just is just silly cheap for B2. I mean, you're talking about a million ounce producer, $1 billion a year in free cash flow, trading at like a three multiple, buying back shares, strong management, strong pipeline. Just, I mean, you have some Mali risk. The Fekola mine, about half their production is in Mali, and Mali has that junta, and it hasn't been, great for anybody that's in Mali. But I think that the Mali government, that the military junta they've kind of pushed it as far as they can push it. They put the Resolute CEO in jail. They're still haggling with Barrick. Resolute paid him off. B2 paid him off. They've created a lot of damage. I don't think people want to, new companies don't want to go into Mali. So I don't think they're going to damage it much more. They've done their damage. They've taken their pound of flesh, but I don't think it's going to get worse, is my point. That's why I have it as a nine. Banyan, they have 7 million ounces of gold. They're trading at 60 million. It's like less than $7 an ounce in the ground. And they're finding more. I think they're going to have 10 million. So at 10 million ounces, they're trading at $6 in the ground, which is in the Yukon in Canada. It's just ridiculously cheap. I don't see how this thing isn't at least a three bagger. It's just a pure optionality play. Trading at like $6 an ounce right now. I think it could easily get to $60. That would be a nine bagger. So yeah, so Banyan and Free Gold are oh, that was interesting. Let me go back. Oh, I will stay here. Banyan and Free Gold are two of my, and I Free Gold down here at a nine, are the two optionality plays that I just think um, it's gonna be hard to not make money if gold goes to $4,000. We have Barrick here, for those that are looking for like three baggers. But Barrick, I just have it a seven because it doesn't have the upside. But I mean, if you can get Barrick at $17, that's quite the entry price. You're looking at an easy three bagger at $2,000 gold. Bunker Hill, they're building their mine. I don't see this thing getting much cheaper. I only have it dropping to 9 cents. But Bunker Hill, they have their mine in Idaho. I think it's mainly a base metals zinc mine, but if they can just double triple their silver production, That could easily be a 10 bagger. I think the risk reward works. Cabral, they've been hitting some really good drill holes. I only have it a 7 because they have to build a mine and they have to grow and they have to expand. Um, but I it definitely is interesting, especially if these drill holes. So if you can get it cheaper, if you can get Cabral at 20 cents, 21 cents, I think that's a steal. Centerra, this one is actually close to being a 9, but they do have production in Turkey, so that's kind of why it's an 8. But they're producing in Turkey. Half of their production is in Turkey, and then half is in Canada. And both of their mines are low capex. I mean, excuse me, low AISC. So they have $600 million. And this is kind of an under the radar mid-tier producer. But they're producing almost, I think, 300,000 ounces, but they're growing and they have 600 million in cash. They have no debt. They're generating free cash flow. Strong management team. It's totally under the radar, and they're trading like a 3 multiple. That one definitely worth a look. Coeur, my favorite silver miner. Um, I think it's less than 485 right now. But if you can get Coeur anywhere close to $4 is a total steal. Discovery, now they just bought the what was the name? Porcupine. They bought the Porcupine mine from Newmont, and it's going to make him a 250,000 ounce producer starting in like Q2 once the deal closes. So here they're going to have all this free cash flow, like 200 million in free cash flow, and they can use that leverage to finance their mine in Mexico. If you can get this, anywhere, buy it here, and you can buy it down anywhere $1 or less of discovery is like, I just think that's just a total steal. Endeavor down to 315. I mean, anything sub $3. I mean, it was down to $1.70, but anything sub $3, I think is a steal. It's a 10 bagger, I think, here. So, I mean, if you can get this thing at $3 or less, I just think that's a steal. First Majestic, 560. Um, I wouldn't mind getting this thing at 450. But it is certain. I have it as a 9. First Majestic. The problem with First Majestic is they just don't have any growth in Mexico. Their only growth is JC, which that mine. I mean, in theory, JC could be a 200,000 ounce producer, somewhere between 100,000 and 200,000. It depends on their exploration potential. But I think JC has a lot more upside potential than people think, especially if gold gets above 3,000. So if gold gets above 3,000 this year, say, if we get to 3,200, 3,300, JC starts looking really good at $3,200 gold. And what people don't realize is that First Majestic was not the operator of JC, Jarrett Canyon. They were not the operator. It was a third party. So now they're going to bring in their own team. And I guarantee you, if they use their own team, the AISC is not going to be over 1,800. It's going to be somewhere between 1,600 and 1,800. And so that's some serious free cash flow at 3,000, 3,200. So that's my expectation, 1,600 to $1,800 AISC for JC when they restart this thing. And that's fine. That's the money making machine. So JC is a good asset, but they need to do another acquisition. And they need to do a silver acquisition because they don't have any silver growth. They really need to. I mean, Go Gold would be a good one. Vizsla would be a good one. Avino would be a good one. They need to. Even Minorum would be a good one. They need to do a silver acquisition to kind of right the ship. The Gatos deal was good, but it wasn't enough. That was a good start. But all Gatos is really going to do is keep their. I don't think Gatos is going to expand production, but it'll maintain. It'll keep the mine life. They'll extend the mine life at Gatos, but it's not. They're not going to grow. I don't think they'll grow production there. But on the whole, yeah. Okay, Free Gold Ventures. I mentioned this one. This thing is even better than Banyan. What people don't realize on Free Gold Ventures is that over 50 private investors, Eric Sprott owns 29%. The Prince George Group owns, I've heard talking to some people on the Prince George Group, 25%. So between the two of those two groups, they are not selling. So anybody that calls Free Gold and says, we want to buy your company, they're like, sure, but you call Eric Sprott because unless he votes yes, we're not for sale. And Eric's like, yeah, I'll sell it to you for 3 billion. They're currently about 280 million. Give me a 10 bagger. You got it, 3 billion. So I think 3 billion is the minimum price that Eric's going to sell it for. And he's going to sit and wait because that mine is going to get built and it's going to be the mill's already there. The mill is the Fort Knox mill because the Fort Knox mill is just sitting there 5 miles away and it's going to basically go into care and maintenance in about 4 to 5 years. And it's just sitting there. It's that mill is going to mine. Guarantee you, it is going to mine the Freegold Ventures mine. And then they're going to put the tailings into the Fort Knox pit. It's just a perfect fit. And so, but whoever gets their hands on that mill is going to pay $3 billion. But they don't have to build a mill. They just have to pay Freegold Ventures 3 billion for. So basically, they're going to be paying, that's going to be kind of part of the cost of that mill, paying them 3 billion. But yeah, it's easy peasy. So that's going to happen. Fresnillo, I'm a big fan of Fresnillo. I think if you can get Fresnillo $9.50, $9, just cross your fingers, that it keeps getting cheaper. The thing that's beautiful about Fresnillo is, I mean, this is a company that's been around for 100 years. They know what the hell they're doing. They have more experience than anybody. This is a company that's been around the block. They're one of the largest silver miners. They mine over 50 million ounces of silver a year. They're smart operators, and they're on sale. It's like how can you beat that with a stick? I mean, how many people are mining 50 million ounces of silver? They're the top three. I mean, Hekla's at 18, and they're not even in the ballpark. Uh, First Majestic's at 14, and the Fresnillo's up at 50. I mean, they're like heads and shoulders above these other guys. I think Pan American, I think is in low 20s. I'm not sure or they might not even be that high, 18. But Fresnillo's got like heads and shoulders around above them. But I'm a big fan of Fresnillo. It's unbelievable how cheap they are. Go Gold. Um, Go Gold, I mean, I have it an 8 because they haven't built the mine yet. Um, they still need to get their permits. They still need to build Los Ricos South, Los Ricos North. But but the two Los Ricos projects are really, really solid. I mean, we're talking about very economic mines, very high cash flow. They're both underground mines. The capex is 150 for Los Ricos South, 250, 225 for Los Ricos North. They already have $100 million, so funding Los Ricos South is nothing. They're not going to have to. Basically, they're not going to have to dilute very much to finish Los Ricos South, and then they'll have enough free cash flow to. They're not going to do much dilution for Los Ricos North either. So, and there's going to be a 15 million ounce company. So, um, this one, I would like to see some company that I own buy them, um, just because I do think that they might get acquired by somebody, but I don't know. I don't know if their insiders are strong enough, but there's not that many elite silver projects out there. You got uh, Discovery, the Cordero project, then you got Go Gold, the Los Ricos project, and you got Vizsla, the Panuco. Um, those are the three big ones. And then you have Endeavor Silver, the one that they're building out, and then you got Aya's Boumadine, and then you got Abra Silver. But there's not that many. These big silver projects are becoming super, super rare. Um, Put me back over here. Um, Guanajuato. Let's see. Yeah, so this is the bottom. Guanajuato. This one is high risk. I have it as a 6, but man, it's bouncing on the bottom here at 10 cents. I I don't, the thing we're taking a risk here with Guanajuato is last year they did two financings. I think they're going to do another financing probably in the first half. Their board and their management team, they don't seem to have any, if you're going to give us, if they can raise money, they're going to raise it. And so that's the risk here with Guanajuato is we're probably going to get diluted at least once this year because they're just not generating enough cash flow We're down to $30 silver today. So this quarter that they're in right now, I don't expect them to generate very much cash. So we might get another dilution. But once silver gets to $35, I think Guanajuato is going to start ripping higher. I mean, this is a stock that could be 50 cents really fast at $36. So this could be a four bagger at $36 silver, in my opinion. It could rip really. Maybe I'm a little aggressive there. Maybe $37 silver. But this stock is going to rip. I mean, maybe it won't get all the way to 50 cents, but to get to 30 and 40 cents, it's not going to take much for this stock to just whoop, zippity doo-dah. I mean, we could see the stock go up 20 cents in a single day. It's got that kind of leverage. Once you get to 36, 37, Guanajuato is going to rip. The other Santa Cruz is going to rip as well. The other one that has huge leverage is SilverX. But right now, SilverX has a little bit too much risk to be on this list. We'll start looking at SilverX at $35 silver. That's when we'll look at it. Right now at 30, it's a little too much. Hecla, you can get Hecla anywhere at 440, $4. It's a silly still. 450 below is just silly still here for Hecla. Heliostar, these guys I think they're going to get to at least 200,000 ounce production. They're currently about 40,000 ounces, I think, this year. I think this is a growing company. I think Heliostar, I think, they're not a nine, they're an eight, but that's better than a seven. So I think that Heliostar is going to grow their company to be a 200,000 ounce producer. My issue with Heliostar is the management team is very young. I think the CEO might be in his late 30s. I mean, he's a young guy. Um, and so we'll see how they grow the company. Um, I wasn't really excited with their last financing. I thought it was a little bit too aggressive. I thought they raised more money than they really needed. It was one of those ones. I see this all the time where companies will raise money because they can. I would have much rather them use debt. They don't have very much debt, and yet they did a financing. They diluted us when I thought they could borrow the money, and so they were protecting themselves. And so a company can get into if a company has debt, then they can get into trouble and they can lose their job. So, so who are they looking out for? They're looking out for themselves. They're looking out for shareholders. And so I wasn't happy with that, but I'm still bullish the company. But the two companies that I kind of kicked us a little bit, Heliostar, their financing, and then the recent deal by Endeavor when they acquired that silver mine down in Peru. I thought that was not a good fit. I wasn't happy with that. It didn't hurt the company, but I didn't think it helped the company. It wasn't very accretive in my opinion. Hochschild, this one probably should be a nine. I mean, I'm a big fan of Hochschild. This is an aggressive company. They find a way to grow. I mean, they did those two deals down in Brazil. Both of them were very excellent deals, I thought. Um, so one of the gold mines is it was Mara Para or something Mara. That one is up and running now, and now they have another one that they're building. So they've basically been buying these very advanced projects and building them. Um, so I like Hochschild and Fresnillo. I just think that they're very cheap mines, good management teams. They know how to grow production, and so yeah, if you can get Hochschild under $3, anywhere 285, I think it's super steel. Impact. So Impact. I've just learned to respect this company. I mean, there's nothing special about it other than they're survivors, and if silver prices rip higher they're going to rip higher. They only produce 1 million ounces a year, but these guys have been around a while. They're currently drilling a zinc mine, and it has gold on the property, and uh, but their main property it's like 50,000 acres of all these past producing mines, and they have drill targets all over the place. So if silver prices ever get high, and if they have cash flow, they will drill those properties out and they will expand them. So It's a property that most people would probably ignore, but I think that might be a mistake. I wouldn't be a bit surprised if they end up being a 10 bagger. International Tower Hill. I've been following this company forever. I mean, it's cheap at 48 cents. And if you can get it at 45 cents or 40 cents, that is just unbelievable steal. I mean, this is a 10 million, 12 million ounce gold project in Alaska that's going to get built that has really strong insiders. They're not going to sell this thing. They've been permitting this thing forever. I think the permits are about 2 years out. Once they get the permits, they're going to build this mine and it's going to be a big gold mine. It's going to be worth a lot of money. And right now it's super cheap. So I'm a big fan of that. Jaguar, I talked about Jaguar already. Lion One. This one is kind of high risk because it's going to take time. I don't think Lion One's going to do anything special this year, maybe not next year, but it's going to take a while for them to get production up to say 70,000 ounces. But once they get to 70,000, I think this thing's really gonna really take off at that point. Because once they get to 70,000 ounces, they're gonna have enough free cash flow to drill more aggressively and find there's a lot of gold on this property, but they just don't have the money to drill this thing aggressively. So they're just taking their time. But I like this stock in about 3 years. So, I mean, if you can get this thing at 16 cents, 15 cents, and then just be patient. As long as you have a 3 year time frame, I think line one's going to work. New Gold, this thing's been a thing of beauty. I mean, their costs just keep going down, down, down. Their costs are going to go down for the next 3 years. They just got the new Afton mine, which is going to improve their free cash flow. But New Gold, I mean, I actually sold this stock and then I bought it back because they were having problems. Their costs were really high, but they fixed their problems. And yeah, I mean, if you can get this thing at 270, I mean, if we have one more, drawdown and these things sell off, if you get New Gold anywhere 270, 275, that's just absolute steal. And then Newmont, this is just like Barrick. I mean, I don't think Newmont's going to go sub 40. And this is kind of like a three bagger here at 44. If you get it at 40, it might be a four bagger because I think it's going to 200. So you get this thing at 40, anywhere 40 to 42, that's a pretty darn good entry for Newmont. Next Gold, this is one of my favorite. New Gold and Red Lake Gold are two of my favorite development plays. Next Gold has two properties. It's going to be both properties are 100,000 ounces a year. They're both supposed to be permitted this year. Whichever one gets permitted first, they're going to build it first. So basically 100,000 ounces, and then they get done with that when they build the other one. So it's Goliath, and I can't think of the other gold Goliath thing. Yeah. So yeah, so they have two properties next to each other. Um, Frank Grustra he's owns 10% and they have about 40% insiders. They're not selling this company. They're going to build this thing and make some money. It's basically, I think, it almost looks like a slam dunk 10 bagger. I like the team. They know what they got. They know what they're building. They're just going to build it and make money. I love these stories. They're just if you do it right, and everything falls into place, there's no reason why these gold mines can't do extremely well. And Next Gold is set up to do extremely well here. So, I mean, 40 cents seems like a bottom floor for this stock. Silver Storm, I only have it a seven, and they're close to an eight. I mean, they're getting ready to start producing this year, and they're going to mine about 2 million ounces a year and then use that free cash flow to build the San Diego project. The reason why it's a seven is I just don't know how long it's going to take them to build San Diego, which is their flagship. It's in the same state in San Diego in Mexico as the mine they bought from First Majestic. But when San Diego gets built, this thing could easily be a 10 bagger. Silver Tiger, I mean, 20 cents is just ridiculously cheap. I think this thing is totally oversold here. I put it on my buy list. I'm going to add shares. If we can get this thing for 17 cents, 18 cents, who knows? Maybe we'll get it for 15 cents. But anything around in this area, 15, 16, 17 cents for Silver Tiger, I think is a great deal. I mean, I like the team. I like the management team. And I like the properties. They're basically open pit gold mine. They're going to do that first, and then they're going to go underground for high grade gold. And they have a lot of high grade gold, and they're going to find more. There's not a lot of really strong silver project out there. This is one of them. I like it a lot. Sonora, this is a small company. This is a small one. They have like 500,000 ounces of gold, but they haven't drilled. They only drilled like 30% of the property. So I think it's going to grow. Um, I think that Sonora, it will get over 1 million ounces. And if that's the case, I mean, you look at the valuation of this thing, it's just super cheap. It's in Mexico in the Sonora. It's in a good location. Sonora is probably the best place. Silver Tiger's in Sonora as well. Sonora is probably it's in northern Mexico. There's nobody's up there. It's like desert. So it's a really good place to mine. And they're waiting for their permit. Once they get their permit, the build is less than a year. It's basically construction ready. So if you can get it for 6 cents, I think 6 cents is a steal for that. Southern Silver, this is another one that I don't think it's going to drop much. Selling at 25 cents an ounce in the ground. If you can get it for, 12, 11 cents, I don't think they're going to give it away. If they sell it, um, it just depends what their selling price is. I'm hoping that they sell for $2 an ounce, so we get, 5 plus bagger. Talisker, just a 7. So there's going to take Talisker is a lot like Heliostar and Lion One. These are like 3-year plays. We're going to have to wait for them to build these mines. But if Talisker, they have the gold. It's going to all these companies have the gold. It's just how long is it going to take them to ramp up production? So they're starting production this year, very small production. But after about 3 years, this thing could really rip. And at $3,000 gold, the thing about a small producer like Talisker, they're not going to be a small producer over time because they have like 2 million ounces. The key here is how long it's going to take them to ramp up, how much it's going to cost them to ramp up. But it's in British Columbia. It's very interesting. And then West Red Lake Gold. I think a lot of people are ignoring West Red Lake Gold. Um, uh, yeah, one second here. Pause recording. Okay, guys, West Red Lake Gold. A lot of people don't like this stock because the previous company, Pure Gold, went bankrupt, and they think, this is a difficult mine. It's nuggety, it's narrow vein. If Pure Gold failed, they're going to fail too. But that's not how I look at it. The way that I look at it is Pure Gold was mining 2.5 grams head grade, and they weren't, and the gold prices were lower, and they were losing money. And they were losing money. They ran out of cash, and they had high debt, and nobody came to their rescue. They couldn't find a white knight. And they're losing money, so what the hell? What could they do? They're losing money. They owe debt, and it's basically a game over situation. But I think this is a completely different story. First of all, they've been overly conservative to make sure that the head grade is high. So they're going to start off with a head grade around 8 grams. I mean, they've identified a portion of the mine where they're pretty confident the head grade, they're testing it now. The mill is on, and they're going to go for 5 to 8 gram head grade, and which is fine. That's kind of what Pure Gold. Pure Gold said they were trying to mine 5 and they only hit 2.5. Um, they were so, and the price of gold is at 3,000. I think that West Red Lake Gold has a huge room for error here. Plus, they just did a dilution to be conservative. So they have a bunch of cash on just in case they have any problems, if you will, and they don't have a ton of debt. Um, and so I don't think that West Red Lake Gold has the kind of risk that people think that they have, and it's very cheap. So if they hit their number, if they hit their production number and their ASIC number and they're generating free cash flow, this thing's going to rip higher. Remember, this thing's in Ontario. This is in Canada. This is a company these are companies that get high premiums because they're in good locations. And this is a company that could easily get a 15 multiple, easily, and it could get even higher than that because of its location risk. And then on top of that, the Madsen mine has excellent exploration potential. Excellent. I mean, this thing has potential to grow production. And then on top of that, we get the Rowan mine for free. The Rowan mine, which is going to come online, they're going to truck the ore down, but they have another deposit called the Rowan, Rowan. It's high grade gold that's about 500,000 ounces that they're permitting right now for bulk sample to move it. So you can't move ore unless you permit it. So it's going to take them about 2 years. You have to basically, if you want to mine something, you want to move some ore, you got to prove it. You got to go through all these regulations and permitting. So it's going to take them 2 years to permit to move the ore to the Madsen mine. And so that's going to add somewhere between 50 and 100,000 ounces, depending on how much bigger Rowan gets. But Rowan's going to grow in size, and we get all that for free. So I think West Red Lake Gold is going to end up being a 150,000 ounce producer. It's probably going to be worth 3 billion, and it's currently worth less than 200 million. So I, I, I'm very bullish. Um, so uh, you know, so these are my buy to the bottom targets. I mean, and I explained to you why. Uh, you know, so I just thought I would share with you guys since I think that we are reaching kind of a moment in time when these bottoms get put in and we start ripping higher. So let's see what happens in April. Let's see if we get down to 4,500 in S&P and then that's it. It doesn't bounce. The key here is I think the 5,500 level in the S&P. We want that to be overhead resistance. We do not want to get above that level. We want to stay below 5,500, and then we want it to break down below 5,000, and then break down below 4,500. The key for us making money in the miners is to get that S&P below 4,500 and then stay there. I mean, literally stay there for a year. If that happens, the miners are going to go absolutely nuts because Wall Street won't have any place to put their money. All right, guys, I think that's it. So we're going to end it there.